Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Steinbeck. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, the Senate Banking Committee releases its crypto market structure bill. Some Democratic senators push back, calling for a hearing.
Plus, geopolitical and policy risks are currently being overlooked by Wall Street. Bitwise's Ryan Rasmussen joins us to walk us through his bullish thesis on crypto.
And BitGo is set to be the first major crypto IPO of the new year. We have the details on pricing and more.
All that and more coming up over the next hour, half hour right here on Bloomberg Crypto. First, though, let's take a look at what Bitcoin has been doing over the last 6 days. Kind of nothing until today, when we're seeing some optimism as a result of that bill, which we will be talking about in just a few minutes. I want to talk a little bit about the last week, though, and the deluge of policy proposals coming from the White House, the rising tensions in the Middle East. Let's go through some of these things. And look, Bitcoin didn't move much on any of this stuff. The president called to ban institutional investors from owning single-family homes. The president called for a cap of 10% on credit card rates. There's the Justice Department probe into the Fed's renovation. Then President Trump this morning saying that Fed Chair Jay Powell is either, quote, incompetent or crooked. Now, none of that moving the needle much when it comes to Bitcoin, other than the bill, which is actually helping the token today, Scarlett.
So yeah, a little bit of a change from, of course, crypto moving on every single thing that happens. I'm looking at altcoins, Tim. Bull runs for secondary, tertiary, basically the less valuable cryptocurrencies, are struggling to rally for even just 1 month. In 2025, the average length of their surge lasted just 20 days, down from 40 to 60 days over the previous 3 years. This is according to Wintermute. Retail investor interest has really shifted away from altcoins to other speculative bets, like, for instance, meme stocks and prediction markets. Tim?
Well, the Senate Banking Committee released a proposal that lets crypto firms offer rewards for customers who own stablecoins. That's among other policies. For the latest, let's bring in Zach Cohen. He covers Congress for Bloomberg Government. Zach, there's a lot in here. It's very quick moving, too. Something happened last night as well. We'll get to that. But first, break down this bill for us. What's in it?
So the Senate Banking Committee released almost 300 pages of legislation late last night, really right up against their own deadline to begin marking up what would essentially create rules of the road regulatory clarity that's been sought by the crypto industry for years now. This is the result of months of negotiations in the Senate between Democrats and Republicans, many of whom are on the Banking Committee and have been studying this issue closely. Obviously, the headline issue there is the treatment of stablecoin yield or rewards, which tries to strike a very delicate balance between the crypto exchanges who want to be able to reward their customers who do have their stablecoins on those exchanges versus traditional banks who are trying to prevent a run on deposits and are trying to prevent direct competition on that front. And so there's a lot of really key questions they have to work out if this panel vote on Thursday is going to be successful.
So, Zach, who comes out ahead? Who likes this bill, the banks or the crypto industry?
So I have not heard from the banks yet today, but I did get a statement from Summer Mersinger, who is the head of the Blockchain Association, one of the key lobbying groups here on Capitol Hill, who has a lot of concerns about even curtailing part of crypto exchanges' ability to offer rewards or interest or yield specifically to their customers who have stablecoins on those exchanges. This has been an ongoing battle. This is something that Democrats and Republicans have been talking about for a long time, and something that could even change right up until the last minute in the Banking Committee when they mark up Thursday morning. And I think we really need to emphasize, too, that this bill could see numerous changes even once it gets to the floor of the Senate. Senate Majority Leader John Thune has said he wants to pass it sometime this year, and there's other senators who would probably have a lot of questions about what this bill would do and general questions about the technology itself. And any changes would have to be reconciled with the House's Clarity Act that they passed last year. And so this fight between the crypto industry and the traditional financial institutions is certainly changed the dynamics of this particular bill and will continue to for the months to come.
Zach, just last question for you. How would you characterize the pushback that we've seen as of now from some members of the Senate?
You're certainly going to have some Senate Democrats, including Senator Elizabeth Warren, who's the top Democrat in the Banking Committee, outright opposed to really anything that could clarify crypto's rules, either on the regulatory front or on the tax front, which is a separate legislative effort, especially if there's not certain protections against conflict of interest, certain ethics guardrails, including for the White House, given President Donald Trump's increasingly prominent role in the crypto industry and for that of his family, is something of a red line for a lot of Democrats. And so I I think you're going to see a lot of Democrats vote against this bill sort of on principle, but if this bill does get across the finish line and get to Trump's desk, it's going to be on a very delicate bipartisan coalition here on Capitol Hill.
Zach Cohen of Bloomberg Government, thank you so much for that roundup. Let's now talk to someone in the industry. Coinbase, the largest crypto exchange in the U.S., has plenty of skin in the game when it comes to this market structure bill. Among specific areas of interest, lawmakers considering whether those companies like Coinbase can offer rewards to customers who hold stablecoins. Let's talk about this now with Kara Calvert, Vice President of U.S. Policy at Coinbase. Kara, good to speak with you. You heard Zach go over what was in the Senate Banking Committee's version of the crypto market structure bill. What is your reaction?
Yeah, well, I think he nailed it. This is a 274-page bill. It is definitely the product of bipartisan negotiations. And one of those key issues is rewards and the ability to pay everyday Americans and make their money work for them. I think that that's the North Star that Coinbase has always worked with is we want to protect our customers. We want to be able to let them earn rewards that puts their money in their pockets, especially when affordability is eating into every single dollar. So this is really about everyday Americans and the ability to compete. I think that that is one thing that keeps getting lost is this isn't about community banks. It's not about lending. It is really about big banks and their strangleholds over the payment system. And so what we're trying to do is compete.
Kara, are there any parts of the bill as it stands right now that would harm the crypto industry as you see it?
Well, right now we are looking through 274 pages is a lot. There are a lot of details in there as Zach was walking through all the different provisions. They are certainly reflective of what we have seen in years past, whether it was Fit 21 a couple of Congresses ago, whether it was Clarity. There are a lot of things that are reflected from previous versions, but there are a lot of details that are coming out for the very first time. So the industry, whether it's exchanges and other intermediaries, to new developers, to issuers, and originators who are thinking about how to raise money and how to launch their assets. Those are the types of things that the entire ecosystem really has to look at and evaluate.
You had mentioned the rewards and how that's an important part of the bill for Coinbase and for others in the industry. How would the company, your company, be impacted if the rewards were to go away?
Well, I think that it certainly would impact our ability to compete and the ability of all the different players in the system, because what the banks are asking for is not just a narrow version of this that just impacts exchanges. They are asking for a broad-based prohibition on rewards. And they're saying that it's because it will erode community banks. And what the committee has tried to do is determine how best to address that risk. And so as we look at that and as the rest of the industry looks at it, we're trying to base it against that risk while also making sure that, again, everyday Americans can engage in this ecosystem, can access stablecoins, and can benefit from that.
So just to make sure we understand this, do you support the market structure bill as it stands right now, at least as what you've seen released?
Well, right now, again, with 274 pages to walk through, I can't say one way or another if we are pro this bill or if we are still looking at it or if we're anti, but I can tell you there's a lot of good in there. I think that the work has been done to make sure that there's a bipartisan agreement, and that's what we need to do to get it to the next step in this process. This isn't over until it gets to the president's desk, and I think that's what I am taking away from it. There are provisions that will 100% need to be changed. There are provisions that will need to stay the same because they have actually done a good job in many parts of this bill. So that's, I think, where we look at this is what's the next step, and the market structure markup tomorrow in the Senate banking is the next step.
Certainly not all lawmakers are on board with this, Kara, and I'm wondering what your message to them would be, especially if they are facing re-election this year. What would you say to them if they're not supporting this?
Well, I think voters are watching. There are 2.6 million advocates as part of Stand With Crypto. Just since Tuesday, more than 225,000 emails have gone to Congress just about this rewards issue, and just to the Senate. I want to be precise about that. 225,000 emails just to the United States Senate about the rewards issue. That's almost 500,000 since this started to come to the forefront back in October. That is a lot of everyday people coming to Senate and saying, we care about this issue. Please don't gut our ability to make our money work for us.
You know, Kara, I think big picture, I know for months, Coinbase has been saying that you need this market structure bill to be passed in order to feel that the business can withstand whatever changes come from future presidential administrations. Do you still feel that way?
Well, there's nothing better than a bipartisan law passing that actually creates clear, stable rules, durable for not just 2, 3, 4 years, but really the next decade. We are creating the foundation that I think will unlock innovation for years and years to come. So we absolutely still believe that we need a bipartisan market structure bill done. And the Clarity Act was a great, great start. It had 78 Democratic votes. It had nearly all Republicans, 2/3 of the United States House. That is a massive win. And so now, as we look to the Senate, we think that that can be replicated. We think that there is a way to make sure that we get a bipartisan win out of the United States Senate, but it's going to take work. This isn't over. The Senate Ag Committee, the Agriculture Committee with jurisdiction over the Commodity Futures and Trading Commission, and that is what has jurisdiction over intermediaries like Coinbase. It's also what will determine how these different things are listed and the everyday public can access those. That still needs to be marked up, and that's coming hopefully the last week of January. Once those two bills pass out of committee, then they'll need to be put together and taken to the United States Senate for the floor debate. That process is still in swing.
Kara, it seemed like the president, at least in the early part of last year, was very focused on crypto, and we heard a lot from him. But of late, it seems like he's been much more focused on affordability. Indeed, that's what's going to dominate his trip to Davos next week. He's talked about capping credit card rates at 10%. He's talked about stopping institutional investors from owning single-family homes in the U.S. He's ratcheted up his attacks on the Fed. Are you worried that he's losing focus of the crypto industry?
I'm not. That the White House has been incredibly involved in this process, and the leadership of David Sachs has been absolutely critical to moving this ball forward, and that hasn't dissipated in the last few months. I think what I would say is that thread is actually exactly what we see right now on stablecoin rewards. The thread of affordability, the thread of making sure that Americans have more money in their pockets, that is exactly why we are fighting for rewards.
Kara Calvert, Vice President of U.S. Policy at Coinbase. Kara, always good to speak with you. Please come back soon. Appreciate it. Well, coming up, excuse me, Scarlett. Bitwise's Ryan Rasmussen says Bitcoin will be less volatile than Nvidia in 2026. He joins us next. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. Bitcoin has joined the broader market in really shrugging off geopolitical risks from Iran to Venezuela, as well as policy risk from Washington. Let's discuss the market with Ryan Rasmussen, Director and Head of Research at Bitwise Asset Management. Ryan, good to have you on the program. You know, as I started the show today, we were looking at Bitcoin over the last week. It's kind of done much of nothing until today, when I think there's some optimism about what happened in the Senate late yesterday. To be fair, a lot of the equity and bond market has kind of ignored what's happened over the last week, but why do you think Bitcoin has really ignored that too?
It's a really good question. It's already been an exciting year for all markets in 2026. A lot has obviously happened, but I think part of what we're seeing right now is this rotation into the belief that Bitcoin is here for the long term because of the regulatory progress that we're seeing in DC, because it's such a heightened issue in DC, and both sides of the aisle are spending so much time talking about it. And then against the backdrop of the macro events that we've seen, whether it's the subpoena of the Fed chair or the events in Venezuela or in Iran, there's so many reasons why Bitcoin as an asset should and does exist. And I think all of these events are part of the reason we've seen Bitcoin find its footing over the past week. It's up year to date since the beginning of January when all of this started to unfold. And I think investors are kind of coming awake to the reason that Bitcoin exists, the reason that it was created in 2009, and the hedge it offers to a portfolio against these types of macro, fiscal, and geopolitical volatile moments.
Yet, it's a sea change from before October 6th marking the high for Bitcoin. We have seen Bitcoin recover, but nowhere close to levels that it had seen at the end of last year. I'm curious as to what the cycle looks like for Bitcoin going forward, because it's been, kind of not being able to find its next catalyst. And I'm wondering what that next catalyst might be.
Yeah, so Bitcoin's historically operated in 4-year cycles with 3 strong years and 1 down year. And a lot of Bitcoin analysts expected 2026 to be another 4th year in that cycle and it to be a down year. We released our predictions at Bitwise at the end of last year, and we actually forecast 2026 will be a positive year for Bitcoin. We think that there's multi-year tailwinds and catalysts that drive Bitcoin higher this year, next year, and over the next decade. Those things include institutional adoption, which first and foremost is the largest driver of Bitcoin's price rally. If you look back to when ETFs launched back in January 2024, Bitcoin was trading around 35 or 40,000. Today it trades around 90,000. And that's a function of institutional investors stepping into the space and having so much buying power at their hands and allocating to Bitcoin. 1, 2, 3, 5% of their portfolios now being allocated to Bitcoin. And we think that's just begun. Specifically, what we believe will drive prices higher in 2026 beyond this regulatory clarity that we hope to get from Washington is the fact that major wirehouses are finally coming online with Bitcoin ETPs. We saw Bank of America now allow its Merrill Lynch advisors to start allocating to Bitcoin ETPs, despite the fact that they've existed since January 2024. They're now able to allocate on behalf of clients. We've also seen Vanguard open up its brokerage clients to Bitcoin ETFs. So we believe institutional adoption is what's really driving the market over the long term. Of course, these regulatory developments add tailwinds to the fire or pose potential risks, but we believe the long-term trend is more institutional capital coming into the space. And since Bitcoin is a asset whose price is based on supply and demand, and since we know that demand is continuing to grow from the conversations at Bitwise that we have with institutional investors every single day, we believe that will drive prices higher over the long term.
Ryan, you mentioned the market structure bill that's making its way through the Senate right now. Over 200 pages. We just spoke to Calvert about it over at Coinbase. Have you had a chance to look at it? And if yes, or even if no, from what you have been able to gather from it, to what extent is it a net positive for the industry?
I think that regulatory clarity in general is a net positive. When we speak to financial advisors and wealth managers who don't spend as much of their time thinking about or using crypto as we do, or as most retail investors do, they're really worried about how crypto is regulated. Are these short-term, tailwinds going to fade when we have the midterms, or the next administration could swing back to anti-crypto? So I think regulation and legislation being in place is fundamentally important to drive adoption. The nuances of the Market Clarity Act are actually really important. I agree with Kara and the Coinbase team that the fact that we're so hung up on passing along stablecoin yield to end users or customers is really, really fascinating. This is one of the reasons that crypto was created in the first place, was to disintermediate and decentralize the financial system so that users and owners of capital can actually access their rewards and stop paying high fees to banks and the like. So I think there's these elements that we're hung up on that are very important.
Yeah.
But I think the overtone is regulatory clarity is a net positive.
I'm looking, Ryan, at your predictions for 2026, and one of them has to do with Polymarket and how open interest will climb to a new high, surpassing the 2024 election levels. The growth of prediction markets has surprised a lot of people. Is that a good thing or a bad thing for digital coins, given that a lot of the interest has shifted away from Bitcoin and the altcoins to speculative bets like meme stocks, like prediction markets?
Yeah, I think the rise of prediction markets is fascinating and is a net positive for the crypto space, mostly because Polymarket as an application is built on top of blockchains and crypto infrastructure. If you think about what is needed for Polymarket to operate and for all of those users to place bets and be paid out, those are blockchains like Ethereum. Those are infrastructure layers like Chainlink, which are crypto applications and crypto assets that help drive the growth of this technology and the use of this technology forward and higher. So I think that's fundamentally important. From a broader context, I think the rise of prediction markets like Polymarket is indicative of information circulating real time 24/7, 365. And I think we saw with the 2024 elections how important that type of free flow of information is. And we're going to continue to see that with the midterms and with other types of events that Polymarket is leaning into. I was watching the Golden Globes this past weekend, and Polymarket was all over the place between every single award announcement. I think it's going to be a big part of the FIFA World Cup. And so the growth of Polymarket just is indicative of crypto applications and crypto technology becoming part of the mainstream consumer applications that we use every single day.
All right, good stuff, Ryan. Thank you so much. Ryan Rasmussen, head of research at Bitwise Asset Management. Thank you so much. Coming up on Bloomberg Crypto, BitGo is poised to be the first crypto IPO of the year. We've got details next. This is Bloomberg Crypto.
Being a public company gives us another level of transparency, allows people to scrutinize our business. We want that. We welcome that. It's really just part of making sure that we're doing everything we can to be the most transparent provider we can.
Well, there you have it, Mike Belshi, the CEO of BitGo, on Bloomberg last month, speaking about a potential IPO. And this week, we learned that BitGo is going ahead with its plan and likely will be the first crypto IPO of 2026. It hopes to raise more than $200 million through the listing. Bloomberg's Monique Malima reported on it. She joins us from Toronto. Monique, a lot of the wind has been kind of taken from the sales of these crypto companies over the last few months. Is this a good omen for 2026?
Hi, so like you mentioned, there has been some of the wind blown out. We saw a number of crypto companies go public last year with Circle, Gemini, and Bullish, and all of them saw really good returns when they first went public, but then have since pared a lot of those gains that they saw. Bitcoin's down about 25% from its peak that it saw last year. But to start off the year, Bitcoin has been rising, and maybe this is a signal, like you mentioned, for BitGo, that they're going to be the first potentially to market for a public crypto company this year, that maybe there could be more of a turnaround in the crypto markets, which is what a lot of people in the industry are hoping for.
And Monique, this is a company that's profitable too, is that right?
Yes, so in the first 9 months of 2025, they had about $8 million of net income attributable to shareholders on about $10 billion of revenue. So they are turning a profit. So that's a good signal to investors, which is what they're hoping for in terms of their IPO.
Bloomberg's Monique Malima. Unfortunately, we got to leave it there, Monique, but always good when you join us. Thanks so much for being with us. That is going to do it for Bloomberg Crypto, at least this edition of Bloomberg Crypto. Don't worry, we'll be back tomorrow. No, not tomorrow.
Next week.
We wish. Next week, same time, same place. This is Bloomberg.